Hey guys, what's going on? Happy New Year. Huge year ahead for 13 Market Move subscribers. In this video, I want you to focus on something that 99.9% of traders are not talking about right now, and that is the big elephant in the room, which I'm going to reveal to you in just a moment what that is. But if you are a trader, chances are what you're doing right now is you're paying attention to the Federal Reserve minutes today, thinking, okay, well, that could move the market. Chances are some of you are not even trading until next week because you're waiting for the CPI number. And you're like, wow, of course I'm going to trade when the CPI comes out. The news I'm going to give to you today is not the Fed, not the CPI number are going to move the market. So the stuff that used to move the market not so long ago in the last 3 months, 6 months is not the stuff that's going to move the market. It's the freshness of the news. It's the news story in the market that the market is not able to see yet that actually is going to drive the big moves in the market. And the big elephant in the room that no one is yet talking about, but that's going to be the news story over the next 30 days, which if you're an alert member subscriber, you're actually making a ton of money on this trade already because you were in this trade since January 30th, 31st. The big elephant in the room, guys, is oil. And we're predicting a huge crash in oil that is coming up. Currently, oil trading is about in the 70s. If oil drops under $70 in a sharp fashion, which we're going to glance at the chart of oil in just a moment, we can get a rather substantial reaction in S&P 500 lower. So any bounce in the market right now is a great entry opportunity on the short side. So if you study all the instances where oil has made a sharp move lower, shortly after that, you'll have an instance where S&P 500 overall, the market itself is going to make a sharp move lower as well. Now, on top of the chart that we're looking at, we got some reasons to believe that the Chinese reopening that everyone is celebrating right now could actually end up as a Chinese reclosing in not so distant future. So pay very close attention to the numbers that are coming out of China. Right now, Chinese stocks are up, everything is up, not in a small kind of way, but in a huge kind of way. The Chinese market, the Hong Kong market is up from 13,000 to 20,000 in a matter of few months. Those sort of gains, the markets are not able to sustain. And so if you just focus on a simple correlation, so the correlation is how does a potential drop, a sharp drop in oil prices, how does that impact the market? Well, the market also responds negatively, and there's many historic instances. The most recent instance where oil prices has led the market to a severe, substantial downturn was, of course, when oil went negative during the COVID in March, April of 2020. And right before that, we had another instance in 2018 where oil has bottomed in December of 2018. And while oil was crashing, S&P 500 was crashing as well. So that's basically a little background. There's many other instances preceding to that, but those are the most two recent instances. So if we're to look at the price chart of oil, you're going to see that the chart is not bullish by no means, and every bounce in oil has been shorted, right? So every bounce, the bounce here was shorted in oil, the bounce here. We've taken advantage of a lot of these opportunities, and on the 31st of December 30th, 31st, we sent you the alert to short oil when it was right at 80 bucks. So at this point, recording this, oil is like 74. So just to let you know, maybe you're a guy that just trades stock options. Times and times I have mentioned to you guys that the real money is made in the markets. While everyone is asleep, while a normal, typical trader is asleep, that's where the money is made in the market. So oil futures are trading basically 23 hours a day. So is gold futures. So is some other instruments that we prefer to trade here at 13 Market Moves. You don't necessarily have to know much about trading futures. You would actually trade options on these instruments with us. So just to give you an idea, this 6-point drop in oil over the course of the last 3 days would have put easy 6-7x return without any complicated option strategies, without doing any crazy kind of stuff, just understanding this correlation, getting into this trade when we gave you the alert right here, and just carrying it all the way down to the current levels. Guys, it was an easy 6-7x. And this potentially could be a 20, 30, 40x trade depending on your strike and expiration. So if you're not sure though how to set up your account, or how to take advantage of trades like that, trading options on oil, many guys that I end up talking to that don't know yet how to do that, they think, well, on futures you got to have hundreds of thousands of dollars in your account to be able to trade oil futures. That is true if you're trading oil futures. That is not true, however, if you're trading options on oil futures. So since it is a new year and you're trying to figure out, okay, how I'm going to take my trading to the next level this year, well, one of the easiest things you can change right now is change your trading account and give yourself the ability to trade the instruments that are trading 23 hours a day, opposed to just going there every day in the morning from 8:30 till 4 o'clock. I mean, some of you don't even know, for example, that SPY contracts, they don't expire at 4 o'clock. They expire past 4 o'clock. You got to know exactly what time frame that is in order to capitalize your returns on SPY sometimes. But just give yourself the ability to trade these other instruments such as oil futures, gold futures, natural gas futures. Guys, last year that was one of the top trades. We've caught natural gas from 380 all the way to 10 bucks. Now it's back at 390. It was yesterday. So there's huge killer entries on some of these instruments that you normally wouldn't think of trading if you're just like an average trader out there, if you're just used to trading stock options. But the truth is, understanding the simple correlations, you can stay in these trades, not worry about what the market is doing. You just focus on these correlations, which will teach you a lot about market correlations in our Trade Like a Rockstar course. Understanding correlations is what's going to allow you to make a ton of money this year. So make sure you schedule a call with 13 Market Moves. Set up your account to where you could trade instruments that you weren't able to trade last year, that could make your trading experience a lot more rewarding this year. So the oil chart, highly bearish. Any bounce is to be shorted. But what's notable is this downward spiral has begun since oil hit 130 bucks. Now we're at 70. And based on this last bounce right here, this last bounce was solely due to a high expectation of Chinese reopening. Well, as we know, Chinese reopening may not be going as smoothly as expected. So any kind of news in China where they're reconsidering this fast and rapid reopening, or any kind of changes, okay, that could really get this chart looking really ugly. China, of course, is the number one user of oil, and if this reopening story was to fade, the market could break way lower. And of course, the level to watch would be 70. If we break 70, and it's also the fashion at which we break the 70 level. If we break the 70 level and we don't stop at 69.50, we don't stop at 69, we can have a sharp move all the way to like 62, okay, 60 within the next 2 weeks. Okay, the market will suffer greatly if that indeed was to happen within such a short amount of time. So any sharp move lower, like for example, if we drop to 70, we bounce to 72, 73, and we sort of go sideways here, okay, that's actually going to be somewhat positive for the market. But watch that level of 70. If oil breaks 70, guys, I mean, this is going to be Armageddon, because if oil breaks 70 in a meaningful way, it's always the speed of the drop which impacts the markets. If the speed of the drop in oil is going to accelerate, okay, if we're going to break this level to the downside, expect some major moves in S&P 500 lower. You may be watching this video right now, and S&P 500 is probably green for the day. It's probably going higher, and you're wondering, well, it looks like they're buying. Guys, don't just focus on what's happening right now. That's what they do in the news, and if you follow the news, you'll never make any real fucking money trading. So focus on what they're not talking about, because they will be talking about this oil situation over the course of the next 30 days. They may start talking about it in the next couple of days. They will sure talk about it if oil does break this 70 level in the next few days. So you'll hear them talking about in the news about this situation in not so distant future. But in order to profit from the trade, you got to know how to put it together right now. So with that, I invite you to make a call to 13 Market Moves, schedule a call, talk to your senior trader. And guys, here, these easy trades, super easy trades. So switch your thinking. Hey, for the first 90 days in 2023, I'm just going to switch from, instead of trading stock options, I'm going to go trade options on futures with Leo. And guys, I've mentioned it in many videos, you don't have to worry about PDT. If your account is under 25K, you can trade options on futures, unlimited. You don't have to sit there and wait. Oh my God, I'm on my second trade, I'm on my third trade. I can't take any more trades today. You can trade unlimited options on futures, guys. If you're not utilizing that, no wonder your account is still fucking under 25 grand. So start the right way. Start this year the right way. Trade the right instruments, and you're going to be set up for success. So let's take a look at the S&P 500 chart. And so right now, there's no signs that S&P 500 is going to drop. As a matter of fact, it looks like, hey, what are we going to do? I'm going to go here first, but beware, because that move higher could be so brief and so short-lived. We're going to have a potential to see this. And where are we going to go, guys? I think we're going to go right here to the 3,500 level. If oil breaks 70 in a sharp, meaningful fashion, okay, I think this is where the market stops next. Okay, there's a lot of buyers right now because, I mean, stocks like Tesla, it's selling 70-80% off from where it was trading last year. But remember this, we were the only channel at 13 Market Moves a year ago that was telling you that Tesla is going to be one of the worst performing stocks in 2022. We were right about it. Nobody wanted to hear it at that moment. But if you focused on the news exactly a year ago, Tesla was an all-time favorite as far as all institutional investors. Tesla could do no wrong. Tesla was trading in crazy levels. Nobody would think about shorting Tesla. Tesla was going in a year ago into the new year as a favorite. So a lot of times when that happens, exactly the opposite is going to transpire in the year. So I think some people are coming in, they're trying to buy Tesla at 100, 110 bucks. I mean, it's down so huge, why not? But I think, things could go way lower if oil breaks. So we could see Tesla lower. We could see, it doesn't mean, after a huge drop like that, we're not doing anything with Tesla. We're not touching it on the call side or the downside. It's just sometimes, remember, there's always a third chance of what things could be doing, and that's just going sideways. So that's why we want to focus on trading futures right now, because that's where the opportunity for your 5x, 10x, 30x trades. So keep this in mind, right? It's not how green the market looks today. It's where overall the big move is going to be happening. And so any opportunity to the upside, because there are some institutions that are coming in and saying, hey, at these levels, let's give it a shot. Let's start buying some things. That's why a lot of these rallies, they're short-lived. So any type of rally, guys, could be a huge, huge opportunity if you pay close attention to the price of oil. Now, some of the things that we've discussed in the last video was the correlation between USD and the market. And I mentioned to you that we stopped being bullish the market when dollar came to this level right here. I mentioned that there's a chance we're going to go sideways for a little while before ultimately dollar is going to break higher. Now, that is highly unpopular belief right now. Nobody believes the dollar could actually break higher from here, especially when you got this death hook and the death cross forming. I mean, these are not. This is an ugly chart for a dollar, to be honest with you. Especially if you combine it with the information on the chart of gold. So out of the woods, everyone just comes in and buys. Nobody wanted to buy gold at $1,620 when we send you the alert to buy gold calls right here. But now, that's everybody's favorite trade going into the next year. Oh yeah, gold is going to outperform everything else. And well, what they don't know is the last time we had a chart like this on gold and everything looked so bullish and perfect. I mean, the shit did this. Okay, so don't just look at these charts. Sometimes you gotta take a look at the context of how a particular chart performed in the past when it had a similar formation. So, but that's a little bit of an advanced subject for some of you. So the easiest way to do is to make sure you interpret the stuff, and the way it's going to unfold is to study the charts of divergence course here at 13 Market Moves. Trade with a coach here at 13 Market Moves, guys. We have a goal this year to help 44 traders hit over $1 million. And we've got 4 different coaches that can help you do that. So make sure, if you're serious about your trading this year, that you schedule a call here at 13 Market Moves today. Set up your account. If you have questions about how to set up your account properly to trade options on these futures, make sure you're ready for some big moves on the right type of instruments, instead of just sitting there and waiting for the grass to grow in some of these stock options. So highly controversial data, highly controversial reading on everything. When the market's been going higher, also has the VIX in the last couple of days, also has the gold. So the normal correlations are broken. Normally, that does not last. So the fact that the gold is rocketing higher at the same time while VIX is going higher, and yesterday we had a crazy situation where we had VIX go higher, dollar go higher, and gold go higher all at the same freaking time. So how do you interpret that? Well, it's a short-term loss of correlation in these instruments. And when that happens, that tells you, okay, the market participants do not all agree on what's happening in the markets at any particular moment. And when they do that, we can have some sharp moves to the upside, to the downside. And when the market is moving opposite to an average trader's belief, okay, when the markets are volatile, that's where you make the fucking money. So if you want to break some levels in your trading account this year, definitely focus on these divergences, focus on these correlations, focus on the stuff that they're not talking about in the news, because oftentimes if you identify what is that next thing that's going to be driving the market, it's not the Fed, it's not the CPI number next week. Focus on oil and watch the oil chart and watch how the USD is going to be responding to that oil chart. The general correlation between USD and the oil chart should be oil lower, dollar higher, okay? And it would normally be the same correlation. Dollar higher, gold lower. But in the meantime, we're getting a situation where gold continuously rocketing higher. That may not last, especially if we get like a big move higher on gold. It's not going to last. Okay, so let's say we go to 1875, 1890 on gold. That would be the level. That would be a perfect level to short. Okay, 1875, 1890 on gold. Somebody's been behind buying a ton of gold. We don't know who it is. We really don't care, okay? But we just know that this level right here is going to be a perfect level to short, because this could also coincide with a pattern known as a failed cup with a handle. So if you really examine this chart here, we've got this situation. Well, normally for this to be a highly bullish pattern, what we want to see first is a drop, which would create the handle. So you'd have this sort of formation. So we can, anytime this formations normally created, we don't get a handle first, okay? If it's just going higher here, okay, in almost 90% of instances, it's going to be a failed breakout. So this is your level. I mean, this is your ultimate level. If you need help with exactly when to pull the trigger in this trade, guys, don't hesitate. Schedule a call. Guys, there's a lot of YouTube channels out there that promote their stuff, courses, so on. I mean, good luck talking to them. You can literally go to 13mmTV right now, schedule a call, go to 13marketmoves.com, schedule a call. You can talk to a live person here that's gonna show you, hey, you focus on this, this, and this, okay? This is how you will do substantially better this year than you did last year. So use this as an opportunity. It is absolutely free, guys. You can learn some new stuff along the way. Dare to get out of your comfort zone and do a few things differently this year. So to summarize the video, guys, the most important thing to be watching right now is not the Fed. It's not the CPI number. The most important thing to be watching right now is the chart of oil and how the chart of USD is responding to that move in oil. Also, if you see any bounces, any crazy bounces in gold, that's a short-end opportunity. Any wild bounce in S&P 500, that's a crazy short-end opportunity, because overall, if we're right about the movement of oil, and so far we've been right on it, guys, because remember, I told you we've gotten into this oil trade last week on Thursday and Friday. So far, oil has dropped 8%, 9% since we've gotten into this trade. We're making healthy some gains. But we believe the bigger move in oil is here, and the market will respond. Historically, there's never been an instance where oil prices have dropped sharply and the market has not responded, also moving in the same direction. So sharp drop in oil prices, normally, if you're an average trader, would translate while oil prices are down. That means inflation is down. That means, you know, Fed doesn't have to raise the rates anymore. All these are true statements. However, if the drop is sharp within a short amount of time, you will always, 100%, no exceptions, you will get a sharp move lower in the market. That's your trade. That's how you can put together some 20, 30x trades. If you pay very close attention to that, nail your entry, guys. The sky is the limit. 2023, guys, I wish everybody a super awesome year. I certainly wish for you to be one of the 44 guys. We're on a mission to take to 1 million plus this year. And if you think you've got what it takes, click the link below this video or visit 13mmtv.com, 13marketmoves.com. Schedule a call to talk to us today. Let's roll. Watch oil, not the Fed.